With the recent action in the Middle East mixed with market reactions, it can be hard to tell what you should do with your investments. And joining us this morning is Matt Eilers from Medalist Wealth Management. We appreciate your time as always. First, let's break down the market's response to Iran. What has that been like over the last couple of days? We're now in day 5 of the conflict.
Yeah, day 5. I know there's a lot of tension out there. When local West Michigan residents are turning on the news, there's emotions that are flying high, and obviously that's parlayed into the stock market as well. But it's not something that is unexpected in times like this, because tension and geopolitical events like this create and spike volatility in the market. So what we're seeing is it can be a little bit uneasy. It is not a non-normal thing, let's say. This is to be expected in times like this. But what we've seen is volatility spike, and you know, if you're tuning in and you're wondering what the heck is this word volatility, it's the degree to which something goes up and down severely. So the roller coaster ride has been a little bit more severe. We've seen it on the downturn, we've seen it on the upturn, but we know that like this is a very normal and expected type of reaction to what's going on overseas.
So this is normal. People shouldn't be worried, should they?
No, it's. You know, what we always want to think about is not reacting with emotion to events like this, because markets just don't like uncertainty, and that's all that we have right here. And when we think about risk and we think about how you're invested, it's always important to remember risk tolerance versus fear tolerance. So a fear tolerance would be making an emotional reaction to world events, where having a true risk tolerance means, means that you have some levels of consistency and discipline in how you're going to remain invested. And if you're taking the right amount of risk, events like this are expected, and they're going to continue, and we just have to be ready to roll with that.
You know, I think there are so many world events happening, especially in Iran, but we also have several other things that have just happened, of course, with the events that happened in Mexico weeks ago, and of course, all of the other headlines that we're seeing. All of this plays into the market. So I think people might feel a little more on edge recently with the markets, understandably, right, with everything going on. What should investors be doing right now to maybe protect their assets, or should they be making moves at all?
Yeah, well, I think one of the first things is don't make an emotional move based off of fear and flee to some sort of an element of a new position that you're going to buy. It's unsettling because the markets have just been on a tear for so many years, and now all of a sudden it's like, oh my gosh, we have the events in Mexico, we have the Iranian strikes, volatility is spiking, and the markets are moving to a degree that we're like, okay, this is not the norm when everything was going up for so long. I think what is really imperative is that you have a plan, and you make sure that you assess, are you taking the right amount of risk during times like this? So if you're looking at your accounts, you're logging in and you're seeing, you know, a drop that is more severe than what you're comfortable with, you may be taking more risk than what you should be. On the flip side, when markets rebound like they did yesterday, if you're logging into your accounts and you're seeing that they're not rising to the degree that you would hope, you may not be taking enough risk. So I think it's a really good time just to revisit risk tolerance. Your risk tolerance will then steer you towards, Tanner, the type of investments that you should be going to. So for some people, this could be a good time to go and seek more positions like treasuries or cash. For others, it shouldn't be, based on their risk. So it all boils down to that. But I think that's the key, is to take a look at, all right, let's audit the type of risk we're taking. Does that mirror what we should actually be invested in?
Interesting. You know, of course, all of this happening while we've got tax season on the horizon. I mean, we are in the thick of tax season right now. We're about a month out from taxes when they're due. You know, let's talk about what we should be doing and what we should be thinking about in March. Obviously, middle of April is when we should be filing those taxes.
That's right. It's our favorite time of the year, isn't it, where we get to settle up and pay the piper. No, but it's timely. All those statements were arriving in January, some in February, and now we're sitting here thinking, what do we do with all this stuff? Obviously, go seek your tax preparer. They're going to help you, file these returns with the IRS, and you can settle up with the government if you need to write them a check. But it's a really good time, rather than just looking in the rearview mirror, to look out the windshield in regards to the next coming year and take advantage of any other tax opportunities. So IRA contributions are a big one. You still have up until tax day this year in April to make any IRA contributions. So if that's something that you are unsure of, should I do this, should I not, you need to talk to a financial professional, and they can help you figure out how best to make those contributions. A traditional IRA contribution can be a tax deduction that you could take advantage of. It's also another really, really good time to go ahead and look at your withholdings to see if those have line itemed out to where you should be withholding more or you should be withholding less. If you're a business owner, it's always a good time to revisit those quarterly payments that you could be making to the IRS. So at the end of the day, I really recommend syncing up with somebody that is going to align tax strategy with your financial situation so you can figure out what the best course of action is going forward.
Yeah, so I'm in my late 20s, about to turn 30 here. I've got a lot of friends that are having major life decisions or moves happening. We're talking babies, we're talking buying a house. If we've had a major life decision in the last year, what would you recommend to those folks maybe seek out or do in this new tax season that we have?
Well, I'll tell you, major life events a lot of the times turn into major life deductions on a tax return. So talk to somebody that can help you understand how that affects your financial situation. There are a lot of professionals that engage in active tax strategy, like our firm, Medalist Wealth Management, but anybody that can engage in that type of planning, it's really, really important that you seek advice. And also your tax professional is a great person to talk to about that. They can help you uncover, hey, are there different opportunities that you should be taking advantage of on your tax return or for the upcoming tax year? But the key is to make sure that you're presenting that information to somebody and you're having a discussion about, here's what's happened, here's where we're going, what does this mean for us financially?
All right, sounds good. We have to leave it there. Matt, always great to see you. Thank you so much for your input, not only on the Iranian situation, but also here back on the home front with our taxes that are due next month, you guys. So get those together. Matt, we appreciate it.
Always.